Hey everybody, Boris speaking Forex. Welcome to the weekly technicals for the majors for Euro dollar, dollar yen, and pound dollar for September 24 to September 28, 2018. And this week, it's really all FOMC showdown. There's literally nothing on the calendar except Wednesday that truly matters in the majors land. We'll take a look at the calendar in just 1 second. But what's interesting is that this past week, the levels crept up, certainly in the euro and dollar yen, but pound dollar is, of course, its own story we'll get to in just a second. But euro, surprisingly enough, even against what you would think strong U.S. yields, rise, relatively decent U.S. data, actually had a massive recovery in risk, even actually against the initial fears of tariff wars and more trade wars with China. So one of the most interesting things I like to look at is when technicals go the exact opposite way of fundamentals. That's a big signal that we should be paying attention to. The fact that euro is closer to 18 than it is to 15 is telling us something that I think we should be paying attention to as far as the trade to the upside. The level in the euro now is 16 to 18. Dollar yen did not die. Dollar did show a little bit of strength this week as it rallied through the 112s, but still has not fully taken out the intermediate term highs, and therefore does not, in my opinion, become a buy until and unless we can take out the 113 level. And cable, of course, its own little drama queen as the Brexit soap opera continues. Today we had a complete reversal of all Brexit news as PM May basically said the Europeans do not want to do the, let me leave that down, do not want to do the checkers deal. And technically it looks horrible, but I'll get to my hesitation about shorting cable, at least in size, in just 1 second. Let's take a look at the calendar first and see what's going on. As you can see, on the major side, we have IFO on Monday, which will be a non-event. Really, we're a little bit bearish euro, although it's mixed. There's weaker manufacturing PMI, but ZOO is a little stronger. I don't think it's going to make much of a difference one way or the other. Consumer confidence, again, complete non-event on Tuesday. Everything comes to a halt on Wednesday. That's where the rubber meets the road. We have the U.S. FOMC meeting, and also when I talk to the COM dollars, we also have the RBNZ meeting. But the U.S. FOMC is, of course, the big event. Market is expecting 225 against 200. That's definitely going to happen as far as the rate hike. The big question is there any temperance of guidance? The Fed seems to be very, very adamant about doing 4 hikes this year, and I think even housing, which has been clearly very weak on the U.S. front, not really stopping it from its hike path at this point. So I don't anticipate a dovish statement from the Fed. That, of course, would be the big surprise. The hawkish statement could push us perhaps through the 113 level on the dollar yen. The much bigger surprise will be if the Fed is at all reticent, because that will really spur a lot of those anti-dollar flows that we're starting to see already. Then we go into end of the week on the majors, and we just have basically CPI data out of Europe, nothing major, and then GDP, which is the third revision, so it really doesn't matter on the U.S. side. Very quiet week. It's all about the Fed and what they're going to do as far as the economic data goes, and of course everything else. Let's take a look at the charts here, and here's what I wanted to show you. So we had this negative piece of news essentially all week long against the euro, but very positive price action. We're trading above the 500, above the 20. Today was a little bit of a pushback, and euro certainly finding hesitancy around this 1750, 1800 level. But here's the thing. If we take out 1800, that's a massively bullish move on the euro, irrespective of whatever you think about the fundamentals, because then basically we're going to be able to recover that massive sell-off that you saw on the ECB meeting in June. This was the ECB meeting where Draghi guided lower, which then took about a month and a half for the euro to really bottom out at the 1300 level, and now we've rebuilt it. And if you're looking at it from a technical point of view, the one other thing that's certainly staring you straight in the face is that we've essentially created an inverse head and shoulders here. Right over here, you see this is the head, and this is the second shoulder, and we're ready to burst out. So very much pivotal moment here. 1800 really looks like it's in grasp. What was the high today? It was 1770. Well, actually, we took out the 1800, came off it. But irrespective of whether we took it out or not, we need to close above it. If we close above 1800 front of the week, very bullish sign for the euro doesn't matter what the FOMC does. I think you got to trust the technicals at this point, because that would really show a much stronger underlying buying force than anybody can anticipate. Dollar yen was positive, but here's the thing. Here's the thing that bothers me. Today should have been a day. Look at the yield. We're at 306. Yeah, we had a little bit of a drop out, but we're well above 3, and we still can't make 113 on dollar yen. This is a critical thing. Maybe it's going to take the FOMC on Wednesday to essentially completely reaffirm the dollar bullish case and push us through this level. But until and unless we take out let me put it this way, actually, not until and unless we close above 113, I don't want to be long this pair, because it feels like it could be a trap. It really feels like it could be a bull market trap where you come in here and it could have a nice, nasty little reversal right back down to 1150. So still very much in an uptrend, but backing off the highs. Momentum has definitely been lost, and I'd like to see recovery of momentum before I want to get long the yen story. Pound, if you're just looking at it technically, that is a super, super bearish candle. We took out 3 days worth of lows, a massive reversal. Typically, that kind of a massive momentum move suggests reversal of flows, a reversal of sentiment. Certainly looks like 3000 is in view for for the near term, but the very, very big risk here is it's a headline trade. It's not something that you're betting on long-term fundamental realignment of the currency. This is something that could flip in a second if all of a sudden Barnier says, okay, we're fine with the Irish border and UK can have its Brexit ideas. I mean, I doubt that's going to happen. I really, really do doubt that's going to happen. But there's just that massive risk, this massive headline risk one way or the other, whipsaw risk. Still, gun to my head, I really think we're going to see 130 front of the week here, because this at very minimum, this is going to be a level the shorts are going to want to test as we go forward. So that's pretty much the majors as we start the week. The euro is showing a lot of relative strength. Cable is showing clear relative weakness, and dollar yen needs to take out 113 before you can get truly excited about a long-term dollar breakout. Wish you guys the best of luck, the best trading. Boris Lonsberg, over and out.